Welcome to Real Estate Investing Abundance, the show for busy, fulfilled professionals like you to learn how to develop financial independence built on solid, passive real estate investments. Now, here is your host, Dr. Alan Lomax.
Hello, enlightened investors. Welcome back to Real Estate Investing Abundance. I'm your host, Dr. Alan. Thank you so much for being with us today. We treasure your presence and we look forward to sharing with you enlightenment about real estate investing. And today I am delighted to have with us Vessi Kapoulian, and she is going to share with us her experiences from a humble beginning to making dreams real and creating financial freedom. Vessi is the founder of Dream, Believe, Achieve Capital Group, a real estate investment company located in Los Angeles, California. Vessi helps busy professionals who are tired of working 60 plus hours a week to create passive income streams to reach their goal of leaving a legacy for their family, diversifying their investments from the stock market, and achieving tax efficiencies. So Vessi, take us into the show and share a memorable experience that helped you to be who you are today.
Absolutely. And first of all, thank you so much for having me as a guest, Alan. I look forward to our conversation. And my parents, my mom in particular, one day told me, hey, if you learn English, I will send you abroad. And that seemed like an impossible dream, but it really motivated me to learn English so I can explore countries outside of Bulgaria. And she did complete her promise. Granted, by the time I made that trip, that was in 93, 94, if I remember correctly. So that was after the wall had collapsed, and travel between East and Western Europe was a lot easier, but she did keep her promise.
Was it challenging to find English instruction in Bulgaria at the time?
It wasn't as difficult because English is also the language of business and trade. So even within the Eastern Bloc countries, Russian was, of course, the predominant language of communication among trade partners, but English was also very popular. With that said, in school, it was not an option to learn English until really high school or later in your development. So in my case, we effectively had to seek after our programs and extracurricular classes, and that's how I had the opportunity to learn and not have to wait until I go to high school. Big journey.
Yeah. Well, certainly the earlier we can learn a language, the easier it is. Our brains just are not equipped to learn languages later on in life. I find that an interesting aspect about brain chemistry. But anyway, that's the way it is. Actually, the best time to learn a language is before you're 2 years old. But anyway, not many of us have that diverse an opportunity.
And it also opens up your worldview as well, which is, for me, it opened a whole new world. And it's not just the language, but it's learning the culture. And eventually that led to more curiosity and forming a dream of coming to the US one day. And that dream is now a reality. But it all started with one simple step: motivation, curiosity, and willingness to do the hard work.
Yeah, languages is fascinating, and learning the languages, we do learn about the culture and the differences in that. But learning a language also, it just in a way that nothing else can do, it really helps us to be able to think more in terms of the other cultures. And that's another strange thing about language. The language patterns and the way different languages are structured just give us different ways and means of thinking and perceiving the world. So yeah, fascinating. I'm just not a quick learner when it comes to languages, and that's a real disappointment to me. I wish that I were one of those people who could pick them up easily. But I'm not. So let us get into to real estate, and let's first of all let's talk about underwriting, and of course that's a critical aspect of real estate investing, and whether we are passive or active investors, we really need to understand the basics of underwriting. And it's critical in any environment, but in our changing environment and in the challenges we face in investing today, it is especially critical. So, talk to us about underwriting from your perspective.
And you made a very important comment. That's one of probably, in my view, one of the most important aspects of an investment opportunity, being able to evaluate it. And I like, or rather describe underwriting as an art and a science. There's definitely a scientific aspect to it and certain methodology one needs to follow. But there is also a big art component that comes to one's personal experience, risk tolerance, investment criteria, which can drive how decisions are made or what conclusions are reached. And specifically, irrespective of how one decides to get engaged in real estate, whether it's actively or passively, and if on the active side, whether it's during the capital formation process or the acquisition process or asset management process, the ability to analyze a deal is extremely important. And when people ask me which area should I start with if I decide to invest in real estate, I say underwriting. And I can go into a little bit more detail into how I structure that or how I break it down in 5 easy steps, but that's how I would describe it.
Well, yeah, if you don't mind, let's go into those to those 5 easy steps. There's nothing easy about underwriting, but if we can certainly systematize it, the better it is for us in terms of the science and particularly the art of that. And that's what scares me about underwriting is the art. So take us through those 5 easy steps.
Okay. So usually when I approach an investment opportunity, I follow what I call the 5-step blueprint, and that's starting at the top line, looking at the revenues with rental properties, that being the rent expenses. What are they today based on the market comps that I can also validate through my own research and diligence? And where do I think they can be, again, based on the demand and supply dynamics of the local market, feedback from third parties like property managers, appraisal reports, and whatnot, and getting really a more realistic view versus a pie in the sky number. Part of the top line, of course, is also making certain vacancy assumptions, and that will vary depending on A, the market, and B, the current market environment. So instead of using back of the envelope or rules of thumb, I really like to understand what are the local market dynamics. I know a lot of people use 5% for physical, 3% for economic vacancy, but that may not be true for the particular submarket you're looking at. To arrive at a more normalized top line. Number 2 are the expenses, and those can also vary from market to market, but there are 3 important items that I look at and make sure that at a minimum those are adjusted. That's the insurance, the taxes, and then the labor, which usually is embedded in the property management, payroll types of expenses. Those are usually our 3 largest items. So making sure those assumptions are reasonable, in line with market. Again, always best to validate it through third parties, such as getting a quote from the property manager, for insurance, getting maybe a couple of quotes from an actual insurance broker, and then taxes, validating that with the assessor's office. Number 3 is the cap rates, and cap rates can have an exponential impact on the valuation of a property. So first starting with the going in cap rate and where the market is today, and then figuring out what the appropriate exit cap rate should be, if especially for for those like me who like to be conservative, I like to assume that cap rate increases over time, which means usually the markets are softer or worse. And if that doesn't happen, then great, you've exceeded your expectations. And by how much you increase varies. If you had asked me a year ago how much I increased the cap rate year over year, I would have told you probably 20, 25 basis points. Why? Because we were in a very low rate environment and the Fed started raising rates very fast. Now I believe we're at the peak of the rate increases. And so increasing it by 25 basis or more basis points a year would be probably overly conservative unless you believe, and that's the art part, that rates will remain in the 7 or 8% range, which I don't think will be the case in the long run. So I'm moderating those assumptions. Number 4, equally important, is the debt structure. Is the debt matching the business plan? And how are you mitigating interest rate risk? So for example, if I'm buying a property that's not stabilized or maybe requires a little bit more work to a point where I might not be able to get a stabilized agency loan, I may be looking at bridge debt options, and that's okay. But then that raises the question, well, what is my refinance risk? What is my interest rate risk? So important considerations to think about. Or alternatively, if I'm getting a long-term debt, say a 7-year loan, but my business plan is really to exit in 5 years, then I'd better make sure that my prepayment penalties are captured in my analysis. And number 5, last but not least, is reserves. There are a lot of things that could happen throughout the intended hold period of an investment, and we cannot possibly predict anything and everything that will happen. So I view reserves as that cushion or rainy day fund that can help you withstand those unexpected events or perhaps adverse fluctuations in cash flow. Personally, I'd like to reserve at least 6 months of operating expenses and debt service. I recognize that maybe on the higher end of the spectrum, but my personal experience has taught me that that's a prudent decision, and for better or worse, we're seeing that now play out in the current market environment. But that's, again, probably where I would say is the art part. If you have a higher risk tolerance and maybe more confident, that's where maybe you would see some operators reserving less. So top line or revenues, expenses, cap rate, debt service, and reserves.
Good summary there. And of course, all of those we could go into detail on each and every one of those 5 components, but we have other things to talk about. But yes, I'm like you. I see so many people, so many investors reserving only 3 months, and that to me is just a little bit frightening, because I do not want to make a capital call on my investors. And so I always raise for 6 months. Sometimes I'd like to do a little bit more than that, but you can get to the point of being unreasonable in your risk prevention there. So talk to us about making your transition from residential to multifamily. So many of us start in the residential single family space. So tell us about your transition.
That's a great question. I decided to make that transition really prompted by my desire to further grow my portfolio and scale. And like with everything in life, the first step I do when I start anything new or make a transition is to get educated. Granted, prior to making that transition, I was a commercial lender for nearly 15 years. So I had quite a bit of experience on the lending side of the equation and how to underwrite deals, for example, but I didn't necessarily have the experience on the other side of the equation as an investor and operator. My residential experience gave me a good foundation as far as learning how to manage properties remotely and so forth. But those are 2 different asset classes. So the first step I did was get educated, and I chose to do that by joining a mastermind for a couple of reasons. One, it provided a more structured learning environment But most importantly, it connected me with like-minded individuals who had similar goals and values, and effectively opened up a pretty large network for me to tap into. And my partners came from that mastermind and that network because relationships naturally formed over time. So as I started that journey and getting educated, the next step for me was to figure out, how do I help others? How do I add value to others, to a team that I may want to join? And for me, I leaned on my strengths. And so I focused on underwriting, the ability to analyze deals. And I focused on a market. For me, initially, that was Florida, more specifically Tampa and Orlando. Eventually, I expanded my market footprint, but having that focus in the beginning was extremely important, because in real estate, there are a lot of shiny objects. There are many asset classes, many great markets, really. You can pick just throughout the US alone, and can be very overwhelming for a beginner. So the power of focus was something that helped me make that next step. So getting educated, taking action, joining a mastermind with the right network, figuring out how I can add value, what are the strengths and the skill set I can bring to the table, and then being focused.
Enlightened investors, if you haven't done so already, be sure and click that like button and also click that share so others can take advantage of the content. And finally, be sure to subscribe so you don't miss a single one of our upcoming episodes. Very good suggestions there. Education and being able to focus, two critical components. And in this industry, it is a challenge to focus because there are multiple shiny objects out there. And even with a good grounding in your educational background, that doesn't eliminate that shiny object experience. And I think that you're right in the mastermind. I think that the masterminds are good at helping us to keep that focus and to find a focus. And it's not easy to find that focus. And I think a lot of people start off thinking their focus is in one place and they end up going to another place. You had your focus on underwriting because you had a really strong background there. And it sounds like that's primarily where you have remained. But it may not be. Once you really get into a mastermind group, you might find that focus shifting. But you do need to have a focus. It is critical for progressing and developing. So your first investments, at least in the commercial real estate environment, were out of state. And I think I can understand why that is. California is a challenging place. I do know a lot of successful investors in California, so it's not like it's impossible to invest there. But California has challenges that many other places do not, to be certain for that. So tell us about your out-of-state experiences. That's where you started, and you're continuing to do that. How do you maintain this out-of-state balance, and how are you able to, at a distance, to continue to create value for yourself and for your investors?
That's an excellent question. And in my case, yes, I was really forced, is maybe a strong word, to look out of state, but based on my investment goals and criteria, that just made sense. And I don't do this by myself. I don't do this alone. So when crossing borders or going to another state, in this example, it's extremely important to align yourself with the right team. If you're in the residential space, that's looking for the right property manager, real estate agents, insurance broker, lender, visiting that market, especially in the beginning, and especially if you're not familiar with that market as much. Going there, really walking the streets, exploring the neighborhood, so you can get a really good feel, is helpful. But when you're not there, you really need to have trusted people, and that will be able to manage the asset, and that's where the team comes into place. And so carrying over those learnings into the commercial or multifamily space, even though I'm not physically in the states where I currently invest in, my partners who are managing those properties with me are there. They're the boots on the ground and have ability to oversee the operations, visit the property if needed, when needed, as needed. That doesn't mean I should completely rely on them. Of course, I always do my own diligence on the market and sub-market to validate the information. But that's where the power of relationships and partnership comes into play and working together as a team. So that's personally for me something that's been really helpful to make that transition and really overcome the discomfort and fear that the property or investment is not in my backyard.
Good suggestions there. So you said that your initial partners came from your mastermind. Did you specifically seek out people in the Florida market, or was it just the fact that there were potential investors and those potential investors just happened to be in Florida, or was there something specific about Florida?
Yeah, specifically when it comes to Florida, I already had some properties within my residential portfolio there. So when the question arose, well, which market should I look at? Florida was one of the contenders. And at that point, I decided to focus there, specifically Orlando and Tampa. So as I began that journey on making connections with brokers and finding deals and analyzing deals, while I was doing all of that, and in parallel, I was also connecting with people within my network or within that mastermind, really first and foremost to find partners where our values align, first and foremost, and two, of course, having that boots on the ground contact, because I knew that when I find a deal, I really won't have a lot of time. Once a deal is under contract, you have 60, maybe 90 days to close. So that's not the time to be starting the journey of finding partners and lenders and capital. So while I was searching for a deal in parallel, I was building those relationships. And a lot of that happened organically through conversations, virtual meetings, eventually in-person meetings. And a lot of that really started with, again, how do I add value to people? So naturally, for me, as I mentioned, I was underwriting. So either helping others how to evaluate deals, maybe looking at potential deals together. And those conversations really also help you figure out how are you going to work together if you were to become partners. And it was very helpful for me to eventually figure out, well, if I find a deal with these criteria, I already have a few people that I know would be interested based on those prior conversations that took place.
So you had mentioned that it is a team effort. It definitely is. What is your primary responsibilities on the team? From what I'm understanding, it's probably sourcing and underwriting. Is that correct, or are there other responsibilities you undertake in your teamwork?
Yeah, so sourcing and underwriting, I will say I have pivoted over the course of the last 12 months, mostly because the Florida market has become a little bit more challenging for a variety of reasons, but the cost basis, particularly insurance, has increased materially. Sales prices have not quite adjusted. They have adjusted some, but not enough to compensate for the more compressed cash flow. So that naturally caused me to pivot and take a step back and think through, well, if I was to restart all these efforts of finding a new market, building broker relationships, getting on the list, all these things take time. I didn't think that will be the most efficient use of my time. So at that point of time, I decided, okay, well, how do I add value to others? And so underwriting as well as bringing capital is what I focused on. So my subsequent investments, those were in Georgia, one in Savannah, the other one in Augusta. I did not find those deals. My partners who operate in those markets did. However, I was able to add value to their team effectively through finance expertise, whether that's doing the second set of eyes on the underwriting, doing the lease audits, comparing the analyzing the financial reports, doing the budget versus actual variance. Those are areas that are, I would say, within my strengths versus, design work and such. I'm probably not the best contact for that. So that's what I focused on. And even after the investment or the deal closes, I remain involved on an ongoing basis in the asset management. Again, mostly focusing on interpreting the financials, putting together financials or investor updates and such.
Well, those skills are certainly always going to be in demand with any team. Well, Vessi, tell us about your company and how it operates and how our audience can take advantage of the services that you offer.
Absolutely. So what I'm focused on specifically within the commercial real estate space is multifamily. That's the one lane I play in and at least focus on that. And I build strategic relationships with operators in markets with strong fundamentals and focus on analyzing the investment opportunities that are presented to me. If the numbers make sense, if I vet the operators and have no concerns there, and the deal makes sense, that's when I present those investment opportunities to my investor community. So I focus on doing a lot of the heavy lifting and upfront diligence on the operator market and the investment itself. So my investors don't have to do that heavy legwork. I always encourage them, of course, to trust but verify, and I constantly share with them educational content, actually not only with them, but with the general public through my site, which is a treasure chest of information, educational content, because I believe it's important for passive investors to be educated as well. So I put a lot of effort on that. But I still take a lot of that heavy lifting up front because more often than not, they're busy professionals and may not have the time or desire to do that deep dive. And that's where I come in to help.
Well, Vessi, let's move into our last 4 questions and share with us one of your most difficult challenges in life and how you came through that time and what was the major lesson you took from that.
This was more of a personal experience, but we went through some health challenges with my mom actually during COVID, and unfortunately she was diagnosed with a type of blood cancer. Never really thought I would have to deal with that or go through that. It's definitely an experience where you put a lot of you lean on your faith, and that can be different for everyone, but that's something that really helped me push through this. But you also learn through that experience that, first of all, everything is temporary, and I had to keep reminding myself that we shall go through it. This too shall pass, even though it may not feel like that in the very moment. But everything is temporary. You have to keep going. Trust the professionals and the doctors to help you through the process. But that thought also made me realize that we're here for a very short time, and you know that a lot of people talk about it in the daily life, but until it hits you is when you really realize it. And that's what really pushed me further to forge forward with forming my business and growing my company, because I see real estate as a vehicle, or really as a tool to live a life of impact and positive impact and significance, and really a way to help others. How I do that is through education and really giving people a tool to find their own freedom, financial freedom, personal freedom. But that's why it's also very meaningful to me, because that's how I see leaving a legacy and helping others after that experience.
Well, share with us 3 good experiences you've had in the last 24 hours.
The last 24 hours. So first we got some good news with I have a fur baby who's going through some actually health challenges as well. But I'm very grateful because we connected with very good medical professionals, and we got some good news regarding his condition, and we have a clear path forward. So little big things like that make me happy. Two is having my parents here for the holidays. I don't always have them here, but very excited about that. And three is I also teach a course on underwriting multifamily properties for beginners, and had a breakthrough moment with my student today, and she really made huge progress today. And I was really proud of her, really happy for her, and really see the fruits of my my labor also materializing. So those would be the three that come to mind at the moment.
Yeah, as an educator, I know those are very, very meaningful experiences. So, how are you putting your success as an investor and entrepreneur to work, creating a world full of well being for all creatures, our furry beings as well as human beings?
It's staying committed first and foremost. It's not a straightforward journey. Entrepreneurship is not an easy journey. Oftentimes people only see the positive side or the wins, but it's staying focused, staying consistent, really digging deep into my why, which is, again, ultimately boils down to living a life of significance and positive impact. And that's what keeps me going every day, so I can continue educating investors on the matter, so they can be not only more educated, but more empowered in making those investment decisions that can really transform their lives in a very meaningful and positive way.
Wonderful. Well, imagine you've come to the end of your life, and as you contemplate your last hours, what do you look back on as your greatest sense of joy and fulfillment?
It's leaving a legacy, and that's what I'm working towards. And sometimes it's not necessarily the material or the financial things that you leave behind. It's how you make people feel and how you impact people in a positive way. I would say probably one of the best gifts I ever received for my birthday was someone reaching out unsolicited to tell me how my welcoming attitude and smile and positivity really helped make their experience at the university at the time a really positive one, and help them more easily transition into college life. And hearing that 20 plus years later was definitely surprising, but it was a very nice surprise. And it really made me realize sometimes things that maybe come naturally to us or we don't give much thought to can make a really big impact on someone's life. So being mindful of how we interact with others, how we treat others. But that would be the one thing I would be really happy about, is leaving positive impact on the people that crossed my path or that I connected with.
Well, that's wonderful. Thank you, Vessi, for being with us. It's been a pleasure getting to know you and learn more about the ins and outs of real estate investing. Enlightened investors, thank you so much for being with us. It's always a pleasure having you. So please take a moment to like, share, and subscribe, and head over to Apple Podcast. We really would be greatly appreciative if you could leave us a rating and a review. Until next time, live abundantly, and we'll see you in the next episode.
Enlightened investors, wait, don't go just yet. I just want to remind you about our recently launched webinar that you will not want to miss. If you're at all curious and would like to learn more about how real estate investing can diversify your investment portfolio, alleviate the anxiety associated with Wall Street swings, leverage your 401ks and IRAs to substantially increase the return on your investment, and do all of this with turnkey, hands-off, passive real estate investments, then you'll want to immediately go to steedtalker.com/webinar. In the webinar, we'll also address the common dubious investment schemes that you want to avoid. To access the webinar, go to steedtalker.com/webinar. I look forward to seeing you in the webinar.
Thank you for tuning in to Real Estate Investing Abundance, brought to you by Steed Talker Capital, a a company working for passionate professionals like you to develop financial independence built on solid, passive real estate investments. As part of our efforts to make the world a better place, Steve Talker Capital contributes to activities and organizations committed to better understand the equine. These endeavors attempt to enhance the human treatment of horses worldwide. Steve Talker Capital, working for a world where all creatures, great and small, flourish abundantly. For resources to develop your financial independence, connect with us at stevetalker.com.